Hello, everybody. This is Noah and John, and we are from UrbanDigs. It is Friday, so you're going to get your weekly Manhattan market update. A lot going on, John, in rates, in markets, in our market. Let's go to supply and start us off. 62.94. Looks like we're ticking up. Show me that chart.
We are ticking up. That is about 3.5% higher than last week. And last week there's a little blip down, which is slightly concerning. But here we are back on the uptrend in supply, which is what this market needs to see here, Noah.
Yeah, a little bit, on that downturn right there, but we're going back up. This is actively updated supply. So there is actually more supply than that, but we filter out all those stale listings that are not updated. And it's just going up. It's going up. So we'll see how long we can stay above that 6 handle. Usually that starts to go down. I just want to mention that, as we go into June, July, and August, you brokers know what I'm talking about. The new listing wave tends to go down. So again, where do we go from here? Do we go down like we usually do, or do we stay elevated or go higher? That is the question. John, let's pivot to pending sales, the measure of Manhattan demand, 4714. Show me that chart.
So that is going slightly down. I mean, really, it's down by 13 units. So essentially it's flat, but I would have expected that to actually tick up a tiny bit. It actually ticked down a tiny bit. Really, in the long term, in the long view of things, it's not doing anything here. It's sort of plateauing. But that's it's interesting to see here as we're hitting the busy season, seeing that number sort of go flat.
Yeah, I mean, listen, John, it's hard to sustain this level of pending sales. You need a lot of deals to go in, and you need like a slowdown with Acris filing them. So if Acris is filing more sales, or if we just tick a little lower, even though we're strong, that's going to be a net negative pressure on pending sales. That's the thing. When these things go higher and higher, it just takes that much more fuel to continue to power that.
Right.
We'll keep an eye on it, but I think that's why the market pulse is slipping a little bit at 0.75. Sellers, you need to be aware of what kind of market we are in. And let's go shift to those weeklies, because we want to look at deal volume. I want to take a look at deal volume, and I'm going to shift to 1 week over here, and I'm looking at supply. How much stuff came on in the last 7 days? 514 things. Johnny, show me that chart.
So here's another interesting thing. I mean, we talked about this last week, a little downtick in supply, and it sort of reversed itself this week. But here we are, May 13th, and we actually saw a downtick of almost, a little over 9% on the weekly new listings here, Noah. So again, contrary to expectations, I would have expected that to be at or above where we were last week. Sort of as we're reaching the peak here, the sellers are trying to get these listings out and move them before we get to the summer doldrums. But that's not the case. And, as we've been talking, Manhattan could use all the supply it can get at this point, since contract signs have been running very hot. However, it seems like the number of supply seems to be sort of self-leveling here.
Yeah, and I just want to give a plug out. If you did not listen to the Kirsten Jordan podcast, the Talking Manhattan podcast that John and I just published today on UrbanDigs, you need to listen to this ASAP. And she talks about the scarcity of quality product that's going on right now. So even though supply is not historically low, historically high or historically low, it's kind of actually more like kind of in the middle low kind of a thing. It's the scarcity of the quality product. Take 20 minutes, listen to that video. It is incredible. Kirsten's amazing. And you got to listen to it. So John, let's shift over to contract signed. This is the key thing. This is what I'm always looking at. 349 things got signed last week. That is still a big number. Show me the chart.
I mean, it's a big number. It's really flat. Again, not much has happened between the last couple of weeks. That's down by 3 units, which if you want a percentage for your bingo cards at home, that's down 0.9%. But, we talked about, or rather, Noah, you just talked about how supply it's sort of in this historical range, but you look at contract signs, and this is why the supply issue is so important right now at this specific moment in time, because contract signs are running at and above where they should be, or not necessarily should be, but where they have been. So if you take all the weeks of 2022, I mean, we're averaging 300 contracts a week, which is, that's something you would expect for the busy season, the average, 300 plus. But if you're thinking about January, thinking about February, and you're adding those to what we've seen so far, and you're averaging 300, that's a lot of contracts that are being signed. And really the demand is requiring more supply. So it's interesting to see that as demand stays high, we're still yet to see that supply come in to sort of, quench that thirst.
Yeah, and you know what? I mean, which way does this go? There's so many variables at play here. I just put out a piece about the sugar high for New York City markets. which I think ultimately will lead to a sugar low later on. I think sellers they need to seriously consider this market like a gift right now in terms of liquidity and do what they can to move their property and see where the market is. But then I look at rentals. I look at what the rental market is doing right now, and is that going to mute any corrective force, or is that going to drive price action, just continue going higher? I don't know. So many variables going on out here, macro, micro, etc. We'll keep an eye on them. But one thing, John, I think is uber interesting, and what I'm hearing a lot more about is price cuts. Price cuts, the number of price cuts and all that. What is the direction going on there? And Johnny, you whipped up this beautiful chart. Why don't you explain to everybody what we're looking at right here and the number of price reductions per month?
So we just went back, a few months. We went back to 6 months back. So December all the way to May. The May number, of course, May is not done yet. So this is sort of a projection based on the current trend of what we're looking at. And it just seems like every month, and this, let me just put this into context. It's normal to see price cuts increase as you go into a busy season. That's totally the case, because there's just more listings out there. You got more buyers out there, and sellers are competing, buyers are competing, right? This is normally what happens. But it's just interesting to see, as this market has been described in terms of frenzied and frothy and bubblicious, right? We've heard all these sort of terms flying around. It's interesting to see that the number of price cuts, even by price tier, has just been steadily increasing month by month by month since December, which, if you think about how many contracts we signed, you wouldn't necessarily think that's the case.
Right. Well, I mean, maybe that's why we're signing contracts. Maybe that's why we're signing. Is sellers are lowering the prices. They're saying, all right, I'll go and do a deal down here. All right. So this is, like I said, this is May is an estimate, right? So you took what we got for May and you extrapolated for the rest of the month. So this is an estimate. And this chart that you pulled up next, I love, because we only showed 5-6 months here. We want to show you the trend without clouding with a lot of data. But this looks at the year-over-year percentage change for the last 5 months, right? And that takes the seasonality element out of it and solves that problem. And if there was not much of a seasonal change, it's going to look something like these guys right here, right? If price reductions are way down and the market's just doing its thing and powering up and sellers don't need to lower prices, it's going to look like it did in January and February. Remember what Brian Lewis said? January. I wish it was January and February again, right? I mean, he was just saying this. It's a little different. Now look at the change, the year-over-year change of the extrapolated estimates for May. And that's where it shines through, the difference of what we're seeing for this month right now relative on a year-over-year basis. Okay, this is a little bit more than what is normal. So that's the visual right over there.
Yeah, you're exactly right. And when you look at that January, February, I mean, that was the issue with supply, right? There's just not a lot of supply. So sellers had no reason to cut prices because buyers are falling over themselves to sign deals. And here we are, supply is still coming in. We're finally starting to see some price cuts. But again, I think it's also important to remember, Noah, that sellers on price side, sellers are going to move higher and asking prices faster than buyers are going to start bidding up and buying those. So I think sellers moved up a little too high in advance, and I think they're starting to back off a little bit. And it's going to be interesting to see how this plays out once we get into the summer.
Yeah, this will be. This is a quickly changing market. We're going to be all over it. We're going to be all over it. We're going to be telling you agents what's going on. We have no bias here, good or bad. We're going to interpret that data. John, thank you so much for bringing up all these charts. It's good to see that sellers are doing what they got to do to get a deal done, because that's what you got to do. If the market doesn't come to you and the market's not there, listen to the markets. So thank you, John. Welcome for pulling up all that data. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, you guys got questions. We got answers. We got our forum right over here. If you want any of the reports that we're posting, it's going to be right over here in just a little bit. Other than that, this has been your weekly Manhattan market update, and we'll catch you next time.